Hey everybody, this is the Mortgage Sensei here. I just want to come back with another video here. This today what we're going to talk about is 6 ways to get a lower monthly payment when you're looking to buy a home. The first way, pretty obvious, but is to get a longer term. So of course, you can buy a home with a 10-year fixed mortgage, 15-year fixed mortgage, so on and so forth. 30-year fixed mortgage is pretty standard. There are some 40-year fixed mortgage options, but going with a longer term is easily by far one of the best ways to get a lower monthly payment. Number two is discount points, right? For those that don't know, you are able to buy down your interest rate and have that interest rate fixed in for the full life of the loan. Discount points is basically prepaid interest that you pay in order to get a lower interest rate, to get a lower payment and save more interest over the life of the loan. Number three, get rid of PMI. For those that are looking to go with a conventional loan, you're looking to put down right around 20%. There are scenarios where you can put down 10%, but 20% is pretty much the go-to when it comes to getting rid of PMI. FHA loans, no way of getting rid of PMI. You got to go with a different program. USDA loans, they don't really, well, technically they have a PMI, but it's a very small amount, almost minimum. You might as well go with that program if you're able to. VA loans, no PMI, and any other non-QM program, no PMI whatsoever. Number four here. Number four is a lower loan amount. So this may translate into you putting more money down or going with less house, or anything along those lines. So basically, the bigger the loan, the bigger the payment, right? Number five, a higher credit score. Now, I'm putting this here specifically because credit normally directly affects your interest rate. So, of course, the higher your credit score, the better your interest rate. The better the interest rate, you lower your payment. The lower the payment, hey, everybody's happy there. So, higher credit score. My sweet spot, I always tell people, try to get to a 640. But, if you're shooting for the 700 or the 750 or 850, if you really want to go all out, then by all means, go for it. But, as I always tell people, don't lose sight of the forest because of the tree in front of you, meaning that don't lose sight of home ownership because you're so hell bent on trying to get an 850 credit score that the market keeps going up and the cycle keeps going on. And over time, eventually you just lose money due to inflation, right? And then last but not least, the final and sixth way to get a lower monthly payment when buying a house is choosing the right program. I mentioned this already in regards to conventional loans, FHA loans, VA loans, but there are some unique program features that you can get now, like ARMs, right? I know a lot of people are terrified from ARMs, especially from the last recession that occurred back in 2008, but if you use the ARM product in a savvy way, it's a great way to get a lower monthly payment. My recommendation is always look at getting an ARM when we're at the peak of a rate incline or coming out of recession, because what the Federal Reserve normally is going to do is try to stimulate the economy, meaning they're going to basically try to give money away for free. Not technically, but they'll lower the Fed rate, which makes the cost of borrowing money cheaper, and that leads to lower interest rates, right? So if you are at the top of the market where interest rates are super high, the Fed is trying to slow down the economy as much as possible, hopping into a 5, 7, 10-year ARM where you got an introductory low interest rate for the first 5 to 10 years, and then it resets according to the market, according to your terms. But if you are able to ride that wave down when it comes to the interest rate, is a great way in order to get lower payments initially and then get them fixed in at a later date. Also, we have what is called a 1, 2, or 3 buy down, where you get, for instance, with a 2-1 buy down, your interest rate is 2% lower the first year, 1% lower the second year, and go to its normal rate on the third year. These type of programs are really catching a lot of steam. It's helping a lot of people get into a hole at a very comfortable monthly payment, right? But again, You want to make sure you think about it in a long-term aspect, put yourself in a very positive or an advantage situation, and use these programs in order to get you a lower monthly payment to get the house that you want. That way, as a lot of my clients say, hey, Nelson, I don't want to be house poor, meaning all of my money that I make every single month going straight to the house, and there's nothing left over to save or invest or anything along those lines. Hopefully this was some great information for you. Again, this is the 6 ways to get a lower monthly payment when you're looking to buy a home. This is Nelson Thompson, aka the Mortgage Sensei, powered by Edge Home Finance, and I'll see you on the other side of home ownership.